Aloha, everyone. Welcome to Java. Thank you so much for joining me. This is Thursday, and it's for August 31st, 2023. So, we got a lot of things that are going on today. We knew this would be a busy day. So, I want to get through these markets and then a few other things that are affecting these factors. Not financial advice, but I do want to bring a little broader understanding of what might be going on here and what we've got to look forward to. So, we're looking at our main indicator here for risk. We are still in a very high territory. It's at 263 currently, but it's come down quite a bit from the 275 that it was earlier in this week. So what happened yesterday, we did get some jobs reporting, and as the labor market is getting soft in the United States, the markets are seeing this as very bullish because they are expecting that the Federal Reserve will not rake heights on this soft data. So I think that's a bit of a mistake because I think that they're going to do exactly what they said. They've stuck to what they've said all of this time and they won't pivot now. So why fight the Fed? I think they will do one more hike in September. The only reason to doubt this, a quarter point hike, is that they have said that they will be data dependent and will be looking at it. However, they have also said that they are more concerned with continuing inflation or the spike in inflation that could happen if they ease up. And every time they get news like this and they see the markets spike, I think the markets are kind of working against themselves because it just deepens the resolve of the Federal Reserve to show that they do need to hike these rates and get this under control. So, with this, we're watching, of course, the elements of this. Main elements are the 10-year yield. It's down to 4.093 currently, down from the 4.3 that the market does not like. So, we've also got the relative strength of the dollar that we're watching with that because those have an effect. Gold is down slightly, and we've got the volatility index is reining back in. So we've got oil had a very good day, and I believe oil will continue to increase. We've got in price because we've got a few factors that are still affecting that. So nothing goes in a straight line. This is not financial advice. However, I do expect higher prices in oil still. We'll see what happens. For the calendar today, we are expecting, had Bostic say basically what I was just talking about, that they are going to be look at the numbers. However, they are still more concerned with inflation than they are with easing up on things, even if it means a little bit of pain. So we're going to get some more jobless claims as well as income spending and core inflation numbers. Those are all potentially market movers. They should be coming in very soon here within an hour, 45 minutes or so. So, a couple of things with oil. We've got a coup that happened in Gabon, another one in Africa. So, along with Niger, what is going on is the people are kind of tired of the regimes kind of taking advantage of them, mostly France in both of these cases. And what's going on is they're very resource rich and they're trying to take it back for the people. So the military took control, and we're going to watch how that continues with supply because they are also an oil rich nation. On top of that, we do still have the dry Panama Canal that they are limiting access. So we should see a supply squeeze, which is also positive for the price of oil. The big green gains yesterday, the large story was that on the labor retail front, when Americans are losing their jobs, the markets rise. And as I said, that's because they are expecting a pivot in the Federal Reserve. And I don't personally see that happening, but we'll see. So we're back to terrible economic news is positive because we're going to see that the Fed will start easing again. On to our bank story. So this is really, in my opinion, right now, the immediate concern. And this is a perfect example of what we have to look forward to coming up here. So UBS just basically cannibalized, overtook Credit Suisse. And this is a perfect snapshot of how they do it. So they made $29 billion in profit. What they did was they overtook the bank, took all of the good assets, basically bought them pennies on the dollar, and then all of the losing loans and everything else they left with the bank and shut. So between a combination of backstopping, losing those loans, they turned this into a major profit and merged into an even larger institution. And we can expect to see more of this happening. So kind of ironic, but with this other story, the Federal Reserve issues hushed warnings to regional banks. And notice they are kind of targeted here. So regional banks are kind of like the middle class and smaller businesses. These were set up as fall guys, many of them, and the other ones that are not playing along are going to go down. So they will be absorbed, merged, conglomerated, whatever word you want to use. Similar to what we just saw with UBS. So with this, we also just got this other story. And this is basically after Moody's downgraded the credit ratings of the 10 banks last month. We just heard from S&P Global. They're another ratings agency. They downgraded 5 additional banks. So the 5 banks they downgraded are listed here. We've got KeyCorp, supposed to be commercial bank, UMB Bank, Associated Bancorp, and Valley National Bank. So these all just got downgraded. They're the next on the chopping block. Let's hit on real estate really quickly. Basically, the story is the investor home buying has dropped 45% in a deadlocked housing market. So they caused this deadlock in the housing market. What happened when rates went so high that your normal first-time home buyer couldn't qualify with the rates above 7.2, 7.3% for a 30-year. The investors are buying it with cash. These investors include companies such as BlackRock. So regular homeowners cannot compete. So this is kind of signaling a peak for the real estate, and we'll see what happens with the inventory from here if it does indeed begin to increase, which will drop prices. We'll see what happens. Another story in trade. I just asked this yesterday regarding the United States. What we export are real GDP products. And this story came out saying the US is losing the corn exporting crown, basically to Brazil. So, in my opinion, the largest chance that we have to get out of this recession naturally is to begin producing, exporting, trading in a responsible way, if you will, and increase our labor. We've got to bring some of this back in house, and this just shows we are still losing it. Next story comes along with this, and this is that China says a drop in trade with the US is a direct consequence of US moves. Well, you can't really argue that because really the United States they've been playing their games back and forth with the sanctions, the wars over Taiwan, and between the BRICS. So, I mean, this is kind of a given, but this is something that needs to be resolved is the trade. So I've got one more story that they're both from Argentina. It's 2 more stories, but it's kind of tied in. So I wanted to go over this really quickly before I let you go. Inflation is soaring. Argentina says they've seen this film before. If you don't know, they just had hyperinflation issues as their currency was tremendously devalued. And what's going on is with their politics kind of looking at a change. We'll see if they stay with BRICS or if they dollarize because they have a tremendous amount of natural resources too, which brings to the second part. They say they're vaca muerta, injecting record gas as a new pipeline boosts capacity. So my Spanish isn't that good, but I thought it's pretty funny. I think that means dead cow, if I'm not incorrect. But at any rate, the vaca muerta is boosting their gas, so that's positive for them. And I have one lava update at the moment, even though there were more regarding research into deterrence for diseases, and I will cover that later. But I was talking about this yesterday. The largest risk of an actual upsetting war is North Korea, and they launched ballistic missiles towards the sea, of course, in the direction of the United States, as if it would do anything, when they had bombers fly by with their drills. So just a lot of saber rattling at the moment. However, I do think this will boost if we need an excuse for the war front to kind of cover for the recession with the war machine. That would be a boost for companies such as Raytheon, General Dynamics, Lockheed Martin. So kind of look towards this, and if they need that crisis and one isn't created elsewhere, we just might have a war still kind of keeping an eye on that. So want to let you guys go. This has gone on too long. I wish you all a green trading day, just a wonderful day in general. Thank you so much for being here. And until I see you again, my friends, stay free.